Right guys, we're now looking at question 1 from the November 2022 accounting paper 2. So let's begin. Okay, so we're going to start off with 1.1, which is again easing us into the question where we're going to match column A with column B. Right, again guys, please remember, try and read through the statements carefully before you choose the correct term from column B. We often, when we mark, we find that students do tend to rush through these type of questions, and remember, by rushing, you're missing something and then you're losing that easy mark. So just take care not to make that mistake. Right, so 1.1, choose an example from column B that matches a cost category in column A. Write only the letter A to E next to the question numbers in the answer book. Okay, and they're giving you an example. Right, so from column A, obviously we've got all our cost categories. Right, so we've got administration, direct material, selling and distribution, and we've got factory overheads. Right, so let's look at administration. Now we know administration, we're obviously looking at the office. Remember, the factory, the premises is broken down into the actual factory where production takes place. Then we've got a tiny office where all the paperwork and the admin takes place. And obviously then there's the warehouse where the selling and the distribution take place. Right, so in terms of administration, when we look at the examples given, so example A, carriage and raw materials purchase, definitely not admin. Salary of the factory foreman, no, because he's part of the factory, so definitely not admin. Rent expense for the office building. Right, so immediately administration deals with the office, so we can clearly see, I don't need to read further, it has to be C. Okay, right, so C, done and dusted. Let's move on to the next cost category. So direct material cost. So direct material, A, carriage on raw material purchased. We know raw material obviously affects your direct material. Carriage is that additional expense. So here I don't need to read further, it has to be A. Right, moving on to the third cost category, selling and distribution. So obviously it can't be A, right? B, salary of the factory foreman, that's not part of sales and distribution, right? C, we've done already. Workers in production, definitely not selling and distribution. Commission paid to the sales staff. So there's my correct answer, has to be E. And then finally, factory overhead, that deals with an expense, an indirect expense, right? Indirect, but relating to the factory. Okay, and I know I can actually hear you calling out the answer. Yes, you are correct. It is B. Okay, right. So 4 marks, 4 easy marks. Again, guys, just read through the statements carefully before you choose the correct answer. Right, let's move on. Okay, so we've obviously done this part, right? So let's move on to the next part of the question. Right, we are given, right, info for Weza Stitches is owned by Annie Brown, manufactures bathroom towel sets, and buys fabric from a local supplier or local suppliers. The information relates to the financial year end 30th of June 2022. Note there were no work in progress stock balances. So there's no opening balance or closing balance, right? And then I need to answer the following questions. So for 7 marks, calculate direct labor cost. Then we've got factory overhead costs that needs to be calculated, and total cost of production. Okay, right, so let's begin with 1.2.1, but let's look at our information first. Okay, right, those are the rest of the questions. Let's move to the info. Okay, so there we go. Right, information A deals with direct labor cost. So the first question obviously wants me to calculate direct labor cost. So let's go through the info and let's do this calculation. Right, direct labor cost, remember, refers to those that are physically working in the factory and producing the items. So we've got 6 workers were employed in the production in 2021 and 2022. Each of them worked 1,840 hours normal time during the year at 40 Rand per hour. Right, so normal time, remember, we're looking at wages or their salary. Right, so there's 6 of them. They worked for a total of 1,840 hours, and each hour they earned 40 Rand. Okay. Right, then they go on to tell us the overtime register reflected a combined total of 230 hours worked at 1.6 times the normal rate, right? So we'll get back to that. And then the last bit of information on direct labor, production staff received a production bonus of 8% of their normal time wages. Okay, so we've got normal wages, we've got overtime, and we've got a bonus. So let's show each of this separately on our answer booklet. Right, so let's look at their normal wage. Right, their normal wage. So remember guys, there's 6 workers. Okay, just repeating my calculation. 1,840 hours, 40 Rand per hour. So I'm just simply rewriting this. So times 1,840 hours. And remember, they earn 40 Rand. Right, so in terms of, okay, right, so let's do that. 6 times the 1,840 times 40 Rand per hour, and the normal wage 441,600. Okay, so 441,600. Right, then from the info we know they also they worked overtime. So overtime register reflected a combined total of 230 hours. So all 6, right, their combined hours is 230, and they worked at 1.6 times the normal rate. So remember guys, the normal rate is 40 Rand, right? 1.6 times 40 will give us the overtime rate. Okay, so 1.6 times 40, and the overtime rate is 64. Okay, right, so 64 times 230, let's write that in our answer book. Okay, so overtime, okay, we had 64 times 230, right, and that is giving us 64 times 230. So the overtime wages 14,720, 14,720. Right, and then finally they also earned a bonus, and I think the bonus was 8% of normal wage, but we can quickly double check that. Right, production staff received a production bonus of 8% of their normal wages. Okay, so that is simply their normal wage 441,600, what we calculated a few seconds ago, times 8%, and that is giving us, right, 441,600 times 8%, okay, and that is giving us 35,328, 35,328. Okay, so remember guys, my total direct labor cost would be the amounts that I'm circling, that's what I need to obviously add on my calculator. Right, so these three amounts added up is going to give me my direct labor cost 491,648. Okay, right, 7 marks. Just make sure you show calculations. Calculations are extremely important. Right, moving on, the next part of the question. Again, calculate, but this time factory overhead cost. And as you can see, they've brought down a total before corrections. So there's corrections that needs to be made to insurance as well as water and electricity. So let's go to the info so we know exactly what's going on there. Right, so the factory overheads, the bookkeeper calculated the factory overhead cost as 541,600. However, he made the following errors which still must be adjusted. Right, so let's look at the first error. He included the entire insurance expense of 32,500 Rand to the factory overhead cost instead of only 60% of this expense. Right, so clearly he made a mistake. We now need to fix this. So let's understand the mistake. So included in your total, remember guys, here's my total, right? Included in this total is the entire amount of 32,500. So immediately I've got to subtract, I've got to take it out. 32,500 needs to be subtracted. What now must I add? I need to add on only 60% of this expense. So I've subtracted the mistake, right? And now let's add the correct amount. So 32,500, and the correct percentage is just 60%, not the entire amount. So I've got to now include 19,500. So plus 19,500. Okay, now remember guys, you could also take 32,500 times 40%, and that's what you can subtract, the net amount. Okay, but I'm going to show my calculation in this way. So let's go to our answer booklet. So remember, we are minusing, right, 32,500, and we are adding 19,500. Right? In other words, we are making an adjustment for, it should be 13,000. Okay, 13,000 needs to be subtracted. Right, so remember, negative plus 19,500, I'm ending up with a negative 13,000. Okay, right, let's now look at water and electricity, and let's see what's the mistake that was made in terms of water and electricity. Okay, he allocated 54,000 to the factory water and electricity using the ratio 3:2:2 for the factory, sales and the office respectively. This expense should have been split in the ratio 2:1:1. Okay, so once again 54,000, right, is what he's now allocated, and that's a wrong amount. So clearly we need to subtract the 54,000. Right, now remember, in terms of the 54,000 guys, let's firstly calculate what should be the correct amount. Okay, so I'm going to use the 54,000 and I'm going to work back to what was the original, the total water and electricity combined. In other words, factory plus sales plus the office. Okay, so how am I going to do this? I want you to watch carefully. So 54,000 is the ratio, obviously this represents 3:3 plus 2 plus 2, so 3/7. Okay, so 54,000 is 3/7 of the total water and electricity. So I want to work out what was the total water and electricity before applying this ratio. So watch what I'm doing. I'm multiplying this by 7, right, divided by 3, because I want the total, 7 divided by what I've used, which is 3. Right, so on our calculator, let's do that. 54,000 times 7 divided by 3, and the total water and electricity is 126,000. That's my total. Right, I now need to split this according to the ratio 2:1:1. So in other words, what portion belongs to the factory? Remember, it's factory sales office, right? Factory sales office. So I'm looking at a ratio of 2/2 plus 1 plus 1, 2/4, or half of this belongs to the factory. Okay, right, so how am I going to now show this? Okay, let's work this out first. Right, so 126,000 times 2 divided by 4, or we can simply divide it by 2. So we're getting an amount of 63,000. That should be the correct amount. Right, so how am I going to fix this? Remember, I've got to subtract what was included. So that 54,000 was the wrong amount, and now I've got to include 63,000. Okay, so let's do that on our answer booklet. Right, let's subtract in brackets minus the incorrect amount, 54,000 plus 63,000, and the net effect, remember I've got a negative, I've got a positive, so I'm going to minus, and the net effect should be a positive 9,000. Okay, right, so a bit of reading there, a bit of calculation, but not too difficult. Again, look at the error. What was the error? Try and understand the error, remove the error, and then add on the correct amount. Okay, right, so our total factory overhead cost, if we, on our calculators, let's just pull that out. Right, so obviously we started off with the incorrect amount of 541,600. That's filled in your answer booklet. Right, we then subtracted 13,000, and we obviously added the 9,000. Okay, there we go. And the correct amount is 537,600. So 537,600. Okay, right, perfect. Let's move on. So the next calculation, calculate the total cost of production for 2022. So we know total cost of production, direct material cost plus direct labor cost plus factory overheads. Right, so from our info, let's go back to our information and let's look at, let's just go back a bit. Right, so our information. Right, if we scroll further down, there we go. Right, so additional information. So we've got direct material, right? And remember, we're looking at 2022, not 2021. So here's our direct material. We don't have to work that out. It's given to us, 652,800. So let's take that through. Okay. Right, there we go. Right, so direct material, an amount of 652,800 plus direct labor cost was what we worked out previously. So there's my direct labor cost, 491,648. So 491,648. Plus factory overheads, what we worked out a few seconds ago, right, plus 537,600, and that should give us, if we add, right, if we add these three amounts, our total cost of production should be an amount of 1,682,000 648 Rand. Right, so that is total cost of production. Okay guys, so we're done with the calculations. I think now there's a bit of interpretation, so let's move on to the next question. Okay, right, so 1.2.2, Annie is concerned that fixed costs increase to 806,400. Explain why she should not be concerned. Provide 2 points, and they want you to quote figures. Right, so I know we didn't examine the info carefully in terms of total cost of production. So let's do that, and then we'll look at why Annie should not be concerned about the fixed cost increasing. Okay, right, so from our info booklet, okay, so remember we've looked at information A, we've looked at B, right? Now we're looking at information C. Okay, now immediately we notice, if you look at fixed cost, right? If we compare previous year to the current year, we can clearly see that fixed costs, there has been an increase. Okay, so while we've got these figures here, let's work out what exactly was the increase. What was that percentage increase? So remember guys, in these type of questions, you often need to substantiate with figures or with a calculation, and this is one important calculation that you need to learn to do correctly. What is the percentage increase? So how do I work this out? I take the difference, right? So I must take the difference between the previous year and the current year, and I divide this by the previous year. Obviously times 100 because I want a percentage. So let's do that. Let's look at the difference, right? So remember it was 806,400. Now, sorry, now it is 806,400. Previously it was 792,750. So if I subtract these two figures, right? So let's do that. Let's subtract these figures. Okay, so we've got 806,400 minus the 792,750, right, and that is the difference. So the cost increased by 13,650, but remember I'm trying to work out a percentage. So if I divide this by the previous fixed cost, so divide this by 792,750, okay, so let's change that to a percentage. There we go. So let's times that by 100, and as you can see, right, hasn't increased by much, right? 1.7%. So it has increased by 1.7%. Now the first point that you can actually make to Annie is, hang on Annie, 1.7% is not close to inflation, right? Remember, inflation at the moment is sitting between 6 to 8%, maybe slightly higher. And remember, as time goes on, costs do increase. So 1.7%, if you compare that to inflation, not that bad, Annie, not that bad. So you don't need to be concerned. So the first response is obviously regarding inflation, right? So we can talk about inflation rate. Okay, and the 1.7% is much lower than inflation. Obviously, you guys can word this better, right? But look at inflation, compare the increase to inflation. Right, now the second point, this one here is very important, so I want you guys to pay attention. I'm going back to information C. Now, if you look at the number of units that was produced and sold, okay? So if we look at last year, 5,250, and if we look at this year, 6,400. Right, immediately if we look at break even, right, last year, 6,954, this year, 6,156. So immediately, if we compare production, right, we can see that there's been an increase in production. And when we talk about an increase in production, if we take the number of units it has increased by, so remember it was 5,250, it's now 6,400. So again, let's look at the difference, minus 5,250. So you've got an additional 1,150 units being produced. 1,150. Right, so immediately, guys, I know you've come across this before, economies of scale, right? What do we mean by economies of scale? This is when costs are spread through or spread over a large number of units. And remember, what happens is the more you produce, the cheaper it becomes for you to produce, because your fixed costs are being distributed over a large number of units. Okay, so clearly we can see in this particular case there's an increase in production, and as you can see, the fixed cost, right, per unit, because we're producing more, you can clearly see the fixed cost per unit has also decreased. So it is becoming cheaper for the business. Okay. Right, so the second reason that you could give and you could explain is economies of scale is being achieved. Right, how is this being achieved? The business is producing, right, producing more units. Okay, and remember, guys, they obviously want you to provide 2 points, quote figures, and this is where you can give that amount that we calculated. So 1,150 more units are being manufactured or produced. Can you work out the percentage increase? Yes, you can, because let's work that out. So if we take the difference, 1,150 divided by the old, right, the previous year, which was this amount here, guys. So divide that by 5,250, right? Okay, let's times that by 100. So we can see the business is producing 21% more. Okay, 21.9% more. So the production has increased by 21.9%. Okay, so Annie, don't stress, right? You don't have any reason to be concerned. Okay, right, let's move on. The next question. Comment on whether the production staff deserve the production bonus that they received, and they want you to provide 3 points. Okay, so in terms of the production staff, we did the calculation a few minutes ago, and remember there was a bonus, and if I was correct, it was 8%. So they're basically asking us, do the staff deserve their bonus? Right, so once again, let's go to information C so that we can either justify, yes, they deserve the bonus, or no, hang on, they actually don't deserve their bonus. Right, guys, so what I want to do is I just want to clean this up quickly. Right, let's just do that so that we're not getting confused. And there we go. Right, that looks way better. And let's now look at the production staff. Right, so we're going to look at, let's start with direct material. Now, if we look at direct material, we can see the direct material cost per unit, right, was 128 Rand in the previous year. And for the current year, the direct material is 102 Rand. So immediately we've noticed there's obviously, it's much cheaper for the business to produce, right? And this is an indication that the materials that's being used, materials is not wasted. Okay, so we're not wasting any materials that we are using. We can clearly see that, which means that the production staff is obviously, there's good controls, right? So there's the controls that they are using is spot on, right? There's no wastage of material. So that is 1 point. So for now, that 1 point, right, means you guys actually deserved your bonus, right? But remember, we've got to mention 3 points. So the first you can talk about is materials not being wasted. There's been a decrease in the unit cost, right, indicating good controls over materials. Right, now let's look at direct labor cost per unit. Now remember, we worked out direct labor previously, right? And let's just go back to our answer sheet so that we can find that amount. There we go. So it was 491,648, right? So if we take this amount, 491,648, and we divide this by the units that were produced, so let's do that, right? So the units that were produced, right? If we scroll down, 6,400. Okay, so let's just go back. So right, this amount divided by 6,400, and that's going to give us our direct labor cost per unit, right? So 491,648 total direct labor cost divided by number of units produced, 6,400. And that is giving us, right, a cost of 76 Rand 82 cents. So 76 Rand 82 cents. Let's go back to our table. Okay. Right, 76 Rand. There we go. Okay, so direct labor, we work that out as 76 Rand, and I know I've got the amount in my calculator. 82 cents, 82 cents, right? So again, if we compare direct labor cost last year, so last year it was 95 Rand, and this year it's dropped to 76 Rand 82 cents. Now what does that mean? Remember, they work per hour, they get paid per hour. So immediately we can see that the workers are being really good when it comes to managing their time. They're being very efficient in that 1 hour, right? They are able to produce more, and at the same time, the direct labor cost has actually reduced. Okay, right, so again showing us that they deserve their bonus. They actually deserve their bonus because their direct labor has decreased. So the second point that you can talk about is direct labor cost per unit has decreased, right? And once again showing efficiency, right? They're not taking too long lunch breaks, or they're not on their phones while they are manufacturing and so on. They are very conscious of the time, and they are producing more in that time. They're managing their time really well. Okay, so that's a third point that you could discuss. Yes, they deserve their bonus. Right, remember we needed 3, so the last point is where we can look at break even. That's what I want to look at. Right, so break-even point. Now, if we look at last year, right, your break-even point, 6,954, and this year, 6,156. So there's been a drop, right? A decrease in break-even simply means that you are covering your fixed costs much quicker, right? And as a result, you're going to end up making a larger profit. You're going to be making profits much sooner. Remember, the point of break even is where all my costs meet my income, right? And the point of break even, 6,156. As you can see, we are producing more units, right? Compared to break even, clearly showing that the business is making a profit. And the fact that break even has decreased is also very positive for the business. So the third point that you can mention or you can discuss is obviously the decrease in break even. Okay, Right, perfect. I'm sure you guys got that. I'm not going to write all of it down because I think I explained it in quite a bit of detail, but those are the 3 points that if I was answering the question, I would include in my answer. Right, moving on now to, I think it's the last question. Okay, a question that often appears in the exam. So just pay attention to this one, please. Annie wants to improve her profit by 50,000 during the next financial year while maintaining cost. Calculate the additional units that must be produced to achieve this target. Right, so how do we work out the additional units that must be achieved? So we're going to take the profit, 50,000, and we're going to divide this by the selling price per unit minus the variable cost per unit. So selling price per unit divided by variable cost per unit, and that's going to give me the additional units that need to be manufactured. Right, so I'm going to say this one more time, guys. We are taking the additional profit, 50,000, and we're dividing it by the additional contribution. Contribution, remember, is selling price minus variable cost per unit. Okay, so let's do that. The selling price per unit, if we go back to our information, right, let's scroll all the way down to information C. So the selling price per unit, 375. And then variable cost per unit, you might not be able to see it. So let me just clean this up. There we go. Right, so here's our variable cost per unit. So we don't have to work it out. It's given to us as 244. Right, so let's take that through in our answer booklet. Okay, so we've done with that. There we go. So the selling price per unit, 375 minus 244. Okay, right, so the additional contribution, I just want to work that out first. So 375 minus 244, right, so it's 131. 50,000 divided by 131. Okay, and let's do that on our calculator. Okay, so 50,000 divided by 131, and the units that needs to be produced, the additional units, right, 382, right, so 381,6, I'm obviously converting that into a unit. So 382 units need to be produced in order for her to make that additional profit of 50,000. Okay, guys, so just remember this question, the last one that we did, is an important calculation. And when we mark, we sometimes find that students are not really getting this correct. So make sure you get this one correct. Right, so we're now done with the question on cost accounting.